at PDAC 2019, and I'm joined once again by our special guest, Mr. Rick Rule. Rick, thank you so much for joining us. We always love having you on SmallCapPower. Let's talk about the gold price. I know we always love to get your insights there as well, of course. So we saw gold rally. I mean, it did take a dip again below 1,300 just last week. Do you think that considering, we have a Fed meeting, a Federal Reserve meeting in March, we have impending U.S.-China trade negotiations, we've got a potential Brexit situation, whatever's going on there, who knows these days, but are these strong fundamentals for the gold price in the near term?
I really can't comment on the near term. The truth is that Buffett says forecasting tells you more about the forecaster than the future. So with that caveat, I think the macro environment is pretty constructive for gold. Over 40 years in my career, there have been a lot of variables that have impacted the gold price. But the most important variable, and this may be a sort of an American comment, but the most important variable has been faith in the purchasing power of the US dollar, particularly as expressed by the US 10-year Treasury. The flight to quality historically was to gold. The flight to quality in the last 30 years has been to US Treasury securities. Twice before in my career, you've had a strong gold price during a period of strong US dollars. In both prior cases, the dollar rolled over and gold did very well. Is past prologue? I don't know. But if you think about gold versus the US dollar, and then you think about the US dollar in isolation, the case is very strong for higher gold prices. Let me give you a couple statistics. Precious metals and precious metals equities comprise about between 1/3 and 1/2 of 1% of investable assets in the United States. In 1982, they were 8% of investable assets in the United States. The 3-decade mean has been between 1.5% and 2%. If gold, I'm not saying that gold is going to go back to its all-time peak market share, but if it reverted to mean, demand for precious metals and precious metals equities in the United States would rise fourfold. I'm not suggesting that gold's going to win the war against the US dollar. What I'm suggesting to you is it's going to lose less badly. And that's very, very bullish.
What about the other sort of breakout commodity that we're seeing here at PDAC, which is palladium? I mean, it's at all-time highs right now, or trading very, very high. Do you have any insights there into whether or not this is part of a longer-term trend, or do you like palladium?
Well, I think it's indicative of the mistake that the market makes. The fact that the palladium price has doubled makes it more attractive to people. The utility hasn't changed, so it's precisely half as attractive as it was before it doubled. If people are attracted to the catalytic metals, they need to be more attracted to platinum than to palladium. My suspicion is that when palladium sold at a big discount to platinum, that fabricators, people who use catalytic chemicals, began to develop fabrication technologies that favored palladium over platinum. The consequence of that is that they changed palladium demand without changing supply, and so the price went up. My suspicion now is that those same people are busily beavering away trying to develop fabrication technologies for platinum, which will take 2 or 3 years, but they'll equal out. The more important lesson, I think, for your listeners is the fact that a commodity has gone up in price, if its utility hasn't increased, makes it less attractive rather than more attractive. 80% of speculators get it exactly wrong.
Okay, interesting. Well, Rick, as we wrap up here, before we wrap up, another thing that is being discussed here at PDAC is really trying to engage more millennial investors into the mining sector. And I'm curious, obviously, how do you at Sprott, sort of approach that and incorporate more millennials into mining, which is traditionally an older generation?
I'm absolutely delighted that you asked that question. I have participated a lot in social media in the last 5 years. The truth is at Sprott, we've learned that almost all of the money that we've spent on conventional advertising we've wasted, and all of the money that we've spent on investor education has worked. For the first time in my career, 40% of the new retail clients to Sprott are female. Never happened before. Mining investors in my life have been like me, old, grumpy, fat white guys, right? The fact that we're getting young engineers, South Asian females as an example, is amazing, and it's a consequence of social media. My prediction is that your generation is social media savvy, and pays more attention to narrative and spreads narrative faster than any generation in the history of mankind. Gold and resources have an amazing narrative, but narrative doesn't matter to people until price action justifies the narrative. If you were to see a little break in the U.S. Treasury securities, and if you were to see a move in gold above $1,500 or $1,600, the whole narrative around gold, a medium of exchange that's similarly a store of value, these types of great big themes play to millennials better than they've played to any other generation in the past. There's just been nothing that interested millennials in precious metals and natural resources. But that could change. I mean, the story is so big and so easy to tell. It doesn't matter to young people until, unfortunately, some of the value has gone out of it. It's the price action that justifies the narrative. Ironically, that makes the narrative less compelling, but people don't know it at the time.
Rick, it's always a pleasure speaking with you. Thank you so much for taking the time.
My pleasure, thank you.